Today in this video I would like to go over covered call screener. This is what we're doing today on Market Chameleon, of course. And when you sell a covered calls, it tells you the outlook, sideways markets. And in order to get to this screener, okay, first of all you need to be a member, so 7 days trial, link in the description below. But then go on screeners right here and single leg strategy right here and click covered calls. And before we go this, let's do a quick disclaimer. Okay, let it load. There we go. We got ourselves insane amount of stuff. So let's read the disclaimer and know that this is not a financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. My name is Eve, also known as Finance After 40. With that being said, let's go and explore the covered call screener. Now, why should you use a covered call screener? Because right now you just go randomly on Robinhood or YouTube and you sell covered calls on whatever stocks that that you feel like. But you can use filters and data. I'm not going to tell you what covered call is, okay? I'm just going to show you what we got. So in here, first of all, I like to change this. Instead of the default of the screener, I'm changing to cover call beat stocks only. And we got ourselves a couple of filters. We got next 30 days. We got cover call win rate above 70%. Cover call average return any positive. Okay. Strategy covered call versus win rate. Okay. So we got better filters. And now we went from I don't know how many pages to only 2. Now those 2 pages, okay, and look, we got a lot of zoom in here, interesting, that caught my eye. But first, there's all those filters. We got the expiration, days to expiration, here's the strike, here's the bid, here's the stock price, okay, delta, the money distance from the stock. So step 1, and we got other stuff, downside cushion, time premium, percentage flat, and cover call win rate, and all that stuff. So there's a few ways to filter. Let's start with the basics. Let's start with the basic. I like this one. Moneyness distance from stock. Tells you the difference between the strike price and the stock price as a percentage. For example, if the strike price is 110, the stock price is 10, the money distance will be plus 10% out of the money. If the strike price is 95, that would be negative 5%. Okay, so I like the money distance, but I also like the simple covered calls, which is not this one. This is the other way. So you see the negative, I don't like that. This is like deep in the money and you sell and you bet that the stock will go down. It's too much thinking. Okay, I want covered calls simple. So I'm changing money distance right here. And it changes all the time. It changes all the time. So we got ourselves a couple of things. Let's see with the first option. See moneyness distance from the stock 2.9. Now don't expect like a giant move of hey, money distance from the stock, I don't know, 30% and collect $1,000. That's not gonna happen. This is like for the average investor that want to add a little covered calls to their portfolio. So let's see what we got. We got Ulta, the first one. It's the beauty stock, $320. 15 billion market cap, expiration in 18 days, September 6, but it tells you there's earnings on August 29. I like to ignore those. Because earnings, I mean, anything can happen. I don't want to deal with earnings, so I'm just moving on. But if you are playing, it's up to you. VST, they've been up a lot lately. I don't know what they do. I'm not touching. But this one, the DIA is the Dow Jones ETF, correct. If you don't know what the stock is, you click here, okay? Tells you the Dow Jones Industrial ETF, 395, okay? So 39,500 is where the index is, 33 billion, that's the ETF. Expire August 23, interesting. The August 23, 9 days from now, you sell the covered call, 400. So if you have, if you just believe in the ETF, if you have 100 shares, if you're just a passive investment, you sell the 400 covered calls, collect $200. You see 199. Let's say a limit of 2. Collect $200, and the money distance is 1.2. We got ourselves all those information. 70.4% covered call win rate. Okay. And all sorts of information, and basically it tells you, hey, you can sell the 400 And if you click here, but this is just one idea, but it's not over yet. In order to see if this is valuable, I want to make sure that this amount, okay, this is a very important part. Now I know that, hey, I can sell the 400, and if it stays below 400, the Dow Jones ETF, great, everything is good. I collected my whole amount. But if I sell the 400, which is now my average is 402, I want to make sure that that $200 that I'm getting based on history is worth either 200 or it's worth less. So I get the maximum. And in order to, let me show you what I mean. So just click here. I'm not saying this is a trade idea to take right now, just showing you what I'm looking for after I found something to generate a little extra income, to do the wheel, sell the 400, and then execute put 395 and all that stuff. If you want to just play around, sell the 23 August 400, and when you run analysis, this is what I'm saying. This is what I mean. You see here, the credit is 203 bucks. Compared to this, you gotta pay attention to the theoretical value 103, theoretical edge 100 bucks. Okay, extra, you get this is crazy. You're getting paid extra 100 bucks just because you look at the analysis based on history and you have Market Chameleon membership. 84% historical win rate, 30% probability of touch. Because you sell cover calls, you don't want it to touch ever. So it has 30% chance to go to just touch the 400, okay? Historical option implied volatility, and if it goes to like 400 and a cent, 0.1, something like that, sure, they can take your trade, yeah, but you already collected 200 bucks compared to 100, which is good. Current market is now 207, you see, so it's just going up. Here's the information. So here's the stock. If we're going down, great. If it's going up to 400, great. If it stays the same, great. And you get your, and that's like solid, you know. You don't, sometimes you just need something safe, solid. Sure, it can go to 410 the next 2 weeks or 450, everything is possible, but you get yourself 1.7% upside cushion. Your break even is 4203, current spot 395, and that's it. That's how you search for trade ideas. Maybe stick to ETFs or stuff like that. Don't go over the small caps to sell covered calls on. So you got a couple of others of the Dow Jones, 399, 388. Okay, it's up to you what you think. Let's do a few more just to see what we got. Lockheed Martin 556. Days to expiration 4, which is this Friday. Price, that's the market cap. You sell the 560. Okay. And you collect 320 bucks. Now there's something. If you have Lockheed Martin and you want to do the wheel on those, you think it's a safe stock that will not, like, after it sells and then you do cash secured put, you'll either keep going forever up or something, or go forever down, something like that on the other side. So this one is, you sell the 560 compared to 556. This is, I would call this the wheel, like part one of the wheel. You buy 100, you sell close to the money, like at the money, near at the money stock, like calls. And then once it sells, your goal is to collect more premium than what you should have, and then do the wheel, sell cash secured puts on the other side. So let's see what this one has, just in from the historical perspective, from the historical point of view. We got ourselves, you sell the 560 and you see the price right now 558. Okay, so it's getting there, but you're collecting $410 compared to 360. Okay, so you see extra 50 bucks, and on the Dow Jones you collected extra 100 bucks. So that tells me, okay, the Dow Jones is a better trade between those two as of now. 70% win rate. You see the Dow Jones was 84, probability of touch 54, the other one was 30. So that's a no-go for me, and I just move on. A VNQ, I think it's like Vanguard something, Vanguard Real Estate ETF, price 91, okay. Expiration in 9 days, and you do those on ETFs, and that's like extra income. That's all it is. The call, you sell the same at the money. Wow, you sell the 291, you collect 125. Okay, something to consider. But let's see something that's a little out of the money. A lot of HYJ. I know this sticker. It says iShare iBox High Yield Corporate Bond. Okay, 78. Let's see what we got. You sell the 78. I want to do a little cushion to the upside. I don't think there's a little cushion. You see, moneyness, distance from the stock, not a lot. You see, all this is already negative. And just refresh it every couple of hours. No one says that you need to do 50,000 trades a day. But you see here, the Dow Jones, that's something to consider. There's also the Ulta, as I said, I'm not touching it because there's earnings. And VST, I don't know what they are, even though I saw the ticker run lately, Vistra Corp. Okay, I'm not gonna find out. So Dow Jones is 395. Sell the 400 call, collect this, compared to $200, compared to like $100 that you should have collected. It's just trade idea. Can it go above 402? Of course. Can it go to 405? Of course. But based on history, the goal is not based on history on the market Chameleon shows us. It doesn't tell us, hey, it's gonna go to 405 or 395 stays there. It tells us that you are collecting $200 while you were supposed to collect 100. That's the whole point. The whole point is to generate extra income based on history, so you can make even more. You're collecting $212 compared to 107, 84% win rate. Now, in order to do this trade, I'm not saying do this trade, but in order to do so, you would either need to have 100 shares on Robinhood, because they won't let you sell naked calls. But if you have a tasty trade, you will probably need to put like 8,000 as buying power, like 20%. Like 15 to 20% is what I've noticed lately. So about 8,000, give or take, something like that, as a buying power opportunity. If you have portfolio margins, a whole different story. But just so you know, but if you do have tasty trade, and this is like a side note, you don't need to have 100 shares, so you don't need $40,000 to do this trade like Robinhood. This is a trade that generate extra income, all that stuff. Do the wheel, do the naked wheel, or like the superpower naked wheel, as they say. Basically, so you sell the 400, but you don't own 100 shares. You just collect the income. That's it. You just need 20% as buying power, which is about 8,000 as far as I know, and that's it. And once you do that, collect $200, move on. If it closes above 402, okay, you will just sell the stock at break even. Just sell the option break even. If you have 40,000 as a buying power and you wanna buy it, that's something else. But I mean, this is more like a naked wheel. That's how I would call it, naked wheel strategy. You sell and you use 8,000 buying power, and then you do the same. Let's say it goes to 4 or 5, I don't know, for example, then you sell the naked put for 400 and you collect the premium, assuming that Market Chameleon tells you that it's fine. And based on history, if you don't want to wait, you can do that. A lot of strategies, a lot of opportunities. The goal the goal of this video is to show you the screener, the covered call screener, so you won't just get left behind. And yes, there's no millions of opportunities, but there are some. There are some, and it just morning, depends when you watch the video. Maybe a couple of hours later, you will find more. But again, you don't need 50,000 trades every day. If you are just selling options for income instead of shedding $40,000 on Robinhood just to get $200, you put buying power of 8,000, and that's it. And you're not gonna use the 8,000. It just tells you, hey, this. And if it goes to 400 or something, just close the trade, get to break even, put stop loss, all that stuff. If it doesn't go anywhere, hey, you made $200 compared to 100, which is what you should have done. Based on history, you got this amount. And now, make the odds in your favor. Put the deck in your favor. That's the call. That's the goal. I hope this was valuable. I'll see you next time.